Bank on precious metals during these troubles. Jump on these portfolio gold stocks to weather the upcoming storm. Agnico Eagle Mines. Agnico Eagle trades at a discount to trailing earnings. Goldfields. Goldfields moves strongly but features a low price earnings to growth ratio. B2 Gold. B2 Gold offers a strong profitability profile. Let's dive in. Here are the 3 gold stocks that will give your portfolio the Midas touch. Welcome to Timely Investment Research. While the underlying concept of portfolio gold stocks might appear anachronistic as all heck, these days, shifting your attention to precious metals makes increasingly more sense. As an all-encompassing summary, we really don't know what lies ahead for the economy. Therefore, exposure to a traditional safe haven asset might appeal to certain market participants. For one thing, credit rating agency Fitch downgraded the U.S. long-term foreign currency rating to AA+, a negative reassessment that hasn't occurred in more than a decade. In fairness, experts view such actions as largely symbolic. However, the concern this time around is that the scale of U.S. borrowing needs shocked Wall Street. Therefore, the fear trade may realistically undergird gold stocks. Second, the metals and mining sector, while not a perfect correlation to the underlying spot market, offers a far more convenient exposure to the precious metal. With Midas Touch gold stocks, you don't need to worry about hauling heavy and dense bullion bricks. Nor must you pay much attention to storage and security. If you're ready to rake in some profits without the hassles, check out these gold stocks to buy. Number 1. Agnico Eagle Mines. A Canadian-based gold producer, Agnico Eagle Mines features operations in Finland, Australia, Mexico, and its home nation. It also runs exploration and development activities, which are more speculative than established operations, in the U.S., along with other regions. Per its public profile, Agnico carries full exposure to rising gold prices thanks to its policy of no forward gold sales. Since the beginning of this year, Agnico Eagle Mines dipped almost 10% of equity value. Arguably, though, this red ink provides an opportunity for contrarians to acquire portfolio gold stocks at a discount. Notably, Agnico Eagle Mines trades at 9.41x trailing year earnings. In contrast, the sector median stands at a loftier 13.43x. What's more, Agnico Eagle Mines features a price-earnings to growth ratio of 0.51x, lower than the sector median of 0.89x. Further, what could entice speculators of Midas Touch gold stocks is the underlying profitability picture. Agnico runs a net margin of 40.49%. Above 92.71% of its peers. Also, its return on equity impresses at 14%. Number 2. Goldfields. One of the world's largest offerings of portfolio gold stocks, Goldfields presents an intriguing idea for those looking to both protect their wealth and accrue solid capital gains. Based in Johannesburg, South Africa, Goldfields conducts business in its resource-rich homeland. In addition, it owns and operates mines in Ghana, Australia, and Peru. Since the beginning of this year, Goldfields gained over 22% of its equity value. In the trailing year, shares swung up 43%. To be fair, such a strong performance might dissuade contrarians seeking Midas Touch gold stocks. For example, Goldfields trades at a forward earnings ratio of 18.87x, which ranks worse than 67.53% of the competition. That's not necessarily ideal. However, Goldfields also runs a price-earnings to growth ratio of 0.47x, favorably lower than 63.82% of its peers. Further, Goldfields commands strong operational stats, including a 3-year revenue growth rate, per share basis, of 17.6% and an earnings before interest, taxes, depreciation, and amortization growth rate during the same period of 30.2%. Therefore, it's one of the gold stocks to put on your radar. Number 3. B2 Gold. Arguably, the riskiest idea on this list of portfolio gold stocks, B2 Gold is another Canadian mining outfit that owns and operates mines in Mali, Namibia, and the Philippines. So far this year, B2 Gold slipped almost 13%. Fundamentally, investors have been trimming their exposure in recent months due to inflationary costs biting into the business. Still, management has also focused on improved mine performances and acquisitive strategies. For those that want to believe in the upside narrative, B2 Gold somewhat stabilized over the course of the 1-year period. In this frame, shares lost just under 6% of value. Moving forward, the company could rise on its robust profitability profile. For example, B2 Gold prints an operating margin of 32%, outflanking 89.58% of sector rivals. Also, B2 Gold offers a fundamental discount. Specifically, B2 Gold trades at a price-earnings to growth ratio of 0.43x. This stat ranks lower than 69.51% of the competition. Also, the market prices B2 Gold at 5x operating cash flow, lower than 68% of other gold miners. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.